Well, short sellers can rejoice today because, boy, we've got another red day. We've got a lot to talk about, from Apple, Amazon, the number of shorts we're seeing, Russia, China, Fed news, more Fed news, and even more to cover. So let's hop right into it. Do keep in mind the triple bundle is now available. So many of you have been asking for a bundle for both, or actually all three: stocks, elite hustlers, and real estate. One-time payment, lifetime access to all current and future lectures, and access lifetime to the live streams as long as those are done in those courses. So grab that triple bundle. It is live now. So let's get started. Apple slowing down hiring. We've heard about this for a while now. It's now official. Apple is cutting hiring substantially, especially with that slowdown on iPhone sales, some of it having to do with China. Amazon now laying off potentially up to 10,000 workers. Also, remember that Amazon Alexa is on the chopping block, costing Amazon around $4 billion a year, with unclear indication of it actually being profitable for Amazon. Remember, for some folks, you're able to, or some people have it set up so that you can order things through Amazon Alexa, but how many people actually do that? I don't know. Maybe you do. Let me know in the comments down below. But more interestingly, record cash flows into leveraged bets against tech right now. Take a look at this chart here. So the higher we see this little tick line go on the right, the more bets we're seeing. I'll just hide myself for a moment. Or the more bets we're seeing against tech. There we go. That works. And right now we've got $658 million of bets that went into SQQQ. That's the triple short for the NASDAQ 100 Technologies Index. $658 million went into SQQQ today, Monday morning, and $256 million went out of TQQQ, which is the triple. So the 500 or the 658 into the short fund is the largest ever increase of bets into the short fund. It's the largest bet we've ever seen in. And the 256 out of the triple bullish NASDAQ 100 has seen the largest outflow since January. This is incredible. At the same time, we're seeing the S&P 500 at liquidity levels so low, which we have not seen really since some of these other crazy lows here. Look at this. We're at 32.67. We were a little bit lower with liquidity over here during the pandemic, the March crush. But really, if we draw a line over, we don't actually see this happen again until 2009. And it's very, very rare that liquidity is this low. There we go. I draw a little line here. It makes it a little bit more clear where we're about to bounce off of that low level of liquidity there. We sat there around 2009, but otherwise, look at this. This goes all the way back to 2000, and you just don't see S&P trading liquidity this low. Remember, liquidity is everything. Liquidity is your ability to actually buy the dip. Just because you want to buy the dip doesn't mean you have cash to actually buy the dip. Some good news today out of Russia. We have the U.S. apparently having had a meeting with officials from Russia in Ankara. This is in Turkey. Obviously, also, if you have not heard, there was what looked like either a bombing or a suicide bombing on a popular shopping street in Turkey. I've personally been on that street before. Really devastating. At least 6 people lost their lives following another tragedy in Dallas, where 6 people also lost their lives from the air show plane crash on Saturday. Just terrible. But we also have some news here from Biden, and then we got to get into the Federal Reserve, which is important. So Biden met with China's Xi Jinping, and they expressed their willingness to compromise on key issues, which is good. China talked about no imminent threat of a Taiwanese invasion. We didn't get any kind of information on COVID-0 loosening. Biden reiterated that the one China policy has not changed, and we're not looking for a new Cold War. Personally, I think this is really annoying, not looking for a new Cold War part, but the one China policy part, because the United States makes it really clear that it recognizes Taiwan as independent. Yet, when they talk to China, they say, we believe in a unified China, which is basically Taiwan belongs to China. So your official stance is that Taiwan should belong to China. And that's what you tell China when you talk to China. But then when you talk to the Taiwanese, or Nancy Pelosi visits Taiwan, you're like, we support your independence. This is like bullshit. Like, there's no other way to put it. Like, no wonder China's like, what's your problem? Like, on one hand, you're doing that with Taiwan, and on the other hand, you're like, oh yeah, we're big fans of free trade, and China's like, really? What's with this CHIPS Act, where you just banned access to a bunch of AI and robotic supportive chips for sale in the Chinese market? All you're doing is encouraging us to tighten our exports to you for quality products that we make, and making us want to grow those at the home base. To which, of course, the U.S. is like, quality products that you make? Oh, okay. It's just, I get it. Like, I get it. The U.S. is strong. It's got twice the economy of China. But there's some things here where I'm kind of like, dude, you can't really blame the Chinese for some of the stuff. It's very frustrating. Anyway, so now let's talk about the Fed, because the Fed sent some more Nikki leak texts, and it's just, honestly, at this point, it's just getting exhausting. Let's talk about that before I talk about more of this negativity, I gotta remind you, use that Black Friday code, okay? This is gonna be the best code that you have had, is the biggest coupon code ever for those programs on Building Your Wealth. I am on vacation for the next few days, but I'm still bringing you content, and we've got a huge set of new lectures coming. Not only does the Elite Hustlers course completely release on Black Friday, but you're going to get brand new lectures that go deep into fundamental analysis and real estate analysis to prep you for 2023 in December. And then I'll probably go into some of the other courses as well, like property management is going to get a revamp, especially as we ramp up House Hack. And you may as well just lock in the prices now, as the prices will be higher as we go forward. So got to contribute to inflation, you know? I mean, it's happening after all. Maybe I'm just playing catch up. Anyway, no, most importantly, do remember that when you join, you get a better price today than you can in the future, and you get lifetime access. So we got rid of any kind of monthly fees. I think we have a really good similar mindset that monthly fees are bad. And so I thought, you know what, let's just go with a one-time fee. All right, so what did we hear from our boy Nikki Leaks, the guy over at the Wall Street Journal who always seems to get texts from the Fed on the latest and greatest? Okay, well, let's go ahead and take a look over here. This morning, we got Nick saying the following. Actually, let's start with this one. He says, the New York Fed's survey of consumer inflation expectations showed that consumer inflation expectations moved up. That is, the wrong way, reversing several months in which the inflation expectations fell. This is true. This is a little bit problematic. However, in my opinion, it's really important to remember that consumer inflation expectations seem to follow what CPI does. So we had a little bit of a peak in CPI, like the Consumer Price Index inflation report, in September. And so it's no surprise that when the survey was taken before the October CPI came out, that expectations would go up. Now, inflation fell. I wonder if you did the survey again, if we would actually see inflation expectations go back down. But yeah, inflation expectations with the New York survey did kind of fall apart a little bit here. A lot of this had to do with gas prices expected to be up 4.8% next year. That's only up from 0.5% in September. So you do have two compounding issues there. Gas price concerns, an extension of this war and drama, drama over gas prices in Europe and war in Ukraine. But gas price expectations believed to be up 4.8% next year versus just 0.5% was the expectation for next year in September. Then for the headline inflation expectation reads from the New York survey, we got a report of 5.9, where we think inflation is going to be in 1 year versus 5.4 in the prior report. In the 3-year inflation report, looking to be at 3.1%, up from 2.9 in the last month's report for 3 years out. That's a problem because, remember, the Fed's trying to get us to 2%, and everybody's excited about this idea that the Federal Reserve is going to reduce rates. But like we talked about in a video yesterday, I don't know that the Fed can justify reducing rates if they want to keep barreling towards 2%. I mean, look, last time after Paul Volcker, we dropped to under 10% within a year, but it took us another 15 years to get under 3% or to around the 2% level. It's remarkable. So expectations now are that it's going to take about 3 years to get to about 3%, 3.1%. And after 5 years, we think we'll be at 2.4%, and that's also up from 2.2. So you are seeing a little bit of a deterioration here in expectations, although again, I do wonder how sensitive that is to the last CPI report. But also, just take a look at the break-evens here. These are the 5-year break-even inflation reads. These are what I always like to look at. It's the market's expectation. I think they're a little bit better at predicting inflation than actual consumers. But if we take a peek over here, we see that it's fallen nicely after that last CPI report, which is good. We're nowhere near where we were a bit ago, like September, October. I really hope we can kind of revisit that sort of downtrend. But I think today's consumer expectations are kind of making this firm up a little bit right here. I got to move where my little icon is here. Sorry. But anyway, let's take a look at some of these other things. Fed Governor Chris Waller on October CPI report. The market seemed to get way out in front. I cannot stress enough, this is just one data point. Remember, the Federal Reserve does not want the stock market to go up because what it actually does is it loosens financial tightness, and the Fed wants a lot of tightness. They want things to be really, really tight. And so when the Fed says we've still got ways to go, what they're really doing is they're echoing what Jerome Powell said in the last FOMC meeting. And this is what they saw happen in July as well. In July, we got some soft reads on inflation. So or before actually the July report, I remember actually being bad. I think they mean regarding the June report, where we kind of had a rally coming out of the third week of June after CPI, and we kind of rallied near to the end of July. And so I think this is the situation they're referring to, where markets really rallied and loosened financial conditions, and the Fed's like, no, we don't want to do that. Remember, 7.7% inflation is still really, really large. It's still really bad. So don't just think one report is good. And then they kind of make this reference to, look, if inflation expectations run away, which now they're trending up, it happens fast. Like it pops like a balloon. It's once inflation expectations unanchor, we're screwed, and we'll have to Paul Volcker the economy, and then we're in for real hell. So, if you're wondering what's going on in the market today, it's a great day for a 60% off coupon code because, well, you've got a little bit of pain. You got shorts loading on the bets again, and the hopes of a rally between now and the beginning of December CPI report got dashed a little bit today, though I'm personally still optimistic that we'll have a nice positive CPI report in December. And hopefully we can really sustain that disinflation we're expecting to see. But you also have to be prepared that that expectation could be wrong, and we could have to be a lot more patient. This is the same thing we see with HouseHack. We will be patient to buy real estate until we've got the best deals possible. And if you want to invest and you're an accredited investor, check out the PPM at househack.com, because this video is not a solicitation, but that website and PPM is. Thanks so much, and we'll see you in the next one. Bye.